Recorded. All right, it's recording. So let us begin. Qualities of a trader. Number one on my list, I have quite a lot on my list because I want to offload a lot for you all. So it depends on where time gonna lead us. All right. So number one is patience. This is the very most important one. As a trader, as a trader, you must learn to be patient. If you're not patient in trading, you cannot make progress. And that is the thing. You can't make progress if you don't learn how to be patient. Now, when we talk about being patient, what does this patience really entail? Because I believe you hear quite a lot of people who tell you, hey, as a trader, you need to be patient, you need to be patient. But what does it really mean to be patient? Does it mean I should just stay like this and continue to look at my charts? No. All right. As a trader, when you have analyzed your market, right? You've analyzed everything, and then you have set areas, you have set your zones where you believe that I want price to get to this area, and then I'll take my trade. Because what a lot of people do is they just get into the charts. Once they just get into the chart, they'll be like, okay, all right, I see the chart doing like this. All right, now I see price coming down. Whoa, 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 and they flip into the market immediately. Boom, they want to sell because they see price coming down like this. They just want to sell. It's quite funny, and that's what a lot of people do. And then it's quite unfortunate that you get to find out that once they place that sell, all right, once they place that sell, they just begin to notice price begins to move back upward, upward. All right, impatient. They just got into the chart because they saw the market going down. They flip in immediately because they want to follow the trend. No, that's not how it works. As a trader, you must learn to be patient. You must learn to analyze your market and be patient. Wait for your market analysis to materialize. Now, what do I really mean? When you have stepped into your chart, you have made all your analysis, you've checked out everything you want to check out, all right? You saw price really coming down. Yeah, you saw it coming down, right? But because you just stepped into the market, you don't know what is happening. How can you just step into a market where you don't know what's happening and you start trading? It's really, it's too bad. So as a trader, you get into your chart. What you want to do is you want to observe what's happening in this market. You want to check out all you need to check out from your higher time frame down to your lower time frame. Observe every single thing. Analyze the market and figure out where you want to take your trade from. Once you've spotted out where you want to take your trade from, the next thing you want to do, once you spread out where you want to take your trade from, the next thing you want to do is to wait for price to get to a certain zone where you're anticipating it to get to, and you take your trade. I've analyzed the markets some time ago that the market took 2 days before it got materialized for me to take my trade. And as a trader that I am, I don't just enter into any trade anytime, anyhow. I always look for what we call high probability trade setups. I don't just enter any trade. I always make sure that if I'm going to take any trade, I always make sure that my profit is going to be very long, right? I always make sure that my profit is going to be very, very long and my stop loss little. That's what I always do. And how do I get all those kind of trades that are very long? By observing my market, analyzing my market as a trader that I am. I don't just get into a chart and begin to take trades. No, that's not what it is. So as a trader, you must learn to be patient. If you analyze your market today and it does not materialize today, keep it, let it be there. And you continue to observe it once in a while until you see price has gotten to where you want to take your trade. You must have that discipline. You say to yourself, look, if price does not come to this area, I'm not buying or I'm not selling because you know what you're looking out for. You're looking out for a trade that's Once it begins your move according to your move or your anticipation, you know very well that this trade is gonna go so far. I'm gonna make huge profit from it. That's the spirit of a trader. So you must learn to be patient, traders. All right, learn to be patient. Now, if we take for instance the trade that I took today on the volatility 100, all right. If most of you were there when I posted the first analysis, this was where the price was then when I posted it. And I told you guys that I anticipate here to be my TP1 and here to be my TP2. All right. I have been monitoring this market for since yesterday when I analyzed it, okay? Because this was where the price really was when I made that analysis yesterday. So I observed this market. I knew that this market is actually a downtrending market. So I knew that if I can see my reasons to take a sell, it's going to be a very long one. All right. That I observed it. I observed it. If you look from your 30-minute time frame or maybe from your 5-minute time frame, because for some people it might be that it might look too small to them. From your 5-minute time frame, you get to see that taking my trade from here. All right. Okay, this was exactly where I took that trade, as you can see here. All right. So taking my trade from, let me move this down. Okay, and put this here. I took my trade from here. All right. Now, taking my trade from here, all the way from here, all the way, all the way down. If we try to count how many pips is this, just between the entry to my TP1, which was here, all right, that is 45 pips. That is what 45 pips. Now, depending on the lot size that I used to take my trade, all right. From here, I took my entry to here alone is 45 pips. How much more the TP2 all the way down here? And how many pips is that? That is 191 pips. Huge. That is what we call high probability trade setup. Not that when I saw the price here and materializing yesterday, this was where the price was when I was observing it yesterday. All right, price was around here. Not that I couldn't take the trade, okay, but I was looking for an opportunity to take higher trade setups. That is patience. That's what we call patience. So as a trader, you must learn to be patient. Analyze your market and leave it. You say to yourself, look, if price does not get here, I'm not taking this trade. You understand? Now, you must understand one thing about Forex. Forex is like a marketplace where you go into it and you want to buy something and you're pricing. Look, can you give me this for 200? And they say, no, I can give it to you for 500. You say, no, please, I need it for 200. The seller says, okay, take it for 450. He said, no, I need it. I just have 200. That is what Forex is all about. It's like a marketplace. So you can always analyze your market because you have that anticipation that, look, I believe I have this anticipation that market is likely to go deep down. So since I have a long move, I have high probability trade setups. I don't have to put myself as low as taking low probability trades. So why should I begin to sell with a little buying order? No, it's not enough. So I want to see reasons to take my trade hard, very long. I want to see reasons to take a very long trade. And for me to see that reason, I have to be patient to wait for all these moves here. I have to be patient for all these moves to complete what they want to do. This is where you see scalpers. Scalpers will tell you, hey, it's oversold, buy. It's overbought, sell. It's oversold, buy. It's oversold, and that's what a lot of people quite do, especially new traders. That's what a lot of you guys do. And at the end of the day, you just get to find out that as you're doing that, you're gradually blowing up your accounts. Because by the time you take a trade, you say to yourself, oh, it's oversold, let's buy. You buy and the market moves here and begins to come down out of fear. You get out of the trade and only for you to see market finally move up. Market will now move up. You say, hey, it's going bullish. Let's buy. Let's buy. You place your buy. Market begins to go down. You're gradually blowing up an account. If you want to be a good trader and a profitable one for that matter, you must learn to be patient. Analyze your market as a trader. Set up the anticipation. Have reasons to take your trade and take it confidently. Patience. And number two is discipline. Discipline is still relating to the patience we're talking about. You discipline yourself. You say to yourself, look, I have rules. You set rules and follow those rules. Like I told you guys, I tell myself, if price does not get to this area, I cannot take that trade. I'm not ready for it. If price does not give me what I'm looking for, I'm not interested in it. That is discipline. That's what we call discipline. Number three, think outside the box. Don't just be a trader who looks at the chart and then you say, okay, price has gone like this. All right, let me see if let me just place myself and see if it will go my way. No, you must learn to think us outside the box. You must learn to check out for everything you need to check out from different zones, different areas, different time frames. Don't stick to one time frame. A lot of traders, especially new traders, they love to go to 1 minute time frame looking for time to buy or sell. No, that is not how it works. If you want to be profitable, you must learn to go out of 1 minute time frame, go out of 5 minute time frame, go into higher time frames, look at the chart, observe the chart, think what is happening in the chart, understand what the chart is interpreting. I always tell my students that these candlesticks you see here are languages. Is a language. They are interpreting something to you. You need to decode what is interpreting to you and understand it well. If you do not understand what the candlestick is interpreting to you, sorry trader, you cannot be profitable in this. Because these things are not here just to tell you the direction of the market. No, they are interpreting something to you. They're trying to tell you, hey, something is happening here. Hey, something happened here. Hey, something might happen soon. That is what these things you see here are actually interpreting. So as a trader, you need to think outside the box. Number four, don't trade and what did I write here? Don't trade and unanalyze the market. Do not just enter into the chart and begin to take trades. That's what a lot of people do. They just open any chart and say, hey, see the market is going bullish. Let's buy, let's buy, let's buy. No, it's not what it is. As a trader, you must learn to analyze your market before you take your trade. Don't enter any market without analyzing it. It's very important because when you don't analyze your market and you just flip in your buy or your sell order, if you lose in that trade, you begin to judge the forex market. You just be like, hey, forex is scam. Forex is nonsense. It's scam. It's bullshit. Just because you lost. But you get to forget that you are the one who made yourself lose. You flipped into a chart. You did not even analyze it. You didn't understand what is happening. You just because you saw the market going bullish, you place your buy. No, it's not the right thing to do as a trader. You must analyze your market. Always learn to analyze your market. Very important. So do not take trades on an unanalyzed market. Another is don't trade all day. Do not trade all day. Some traders from morning to night they are trading. And then you get to find out that if the profit they made in the morning, they blow it up by evening. It's even quite unfortunate that sometimes some people blow up their account even before afternoon. Why? Because they want to trade all day. They have this belief that, hey, there's a lot of money to make in the forex market. So let's keep trading. Oh, I've made profit now. Wow. I want to trade again. I know I'm going to make another profit. And they begin to lose it gradually. Do not trade all the day. If you make profit in the morning, trader, be satisfied with it. Be satisfied with it. I never knew this until one day when I blew off an account of mine. And I said to myself, and that was during my early days of trading. And I said to myself, wait. How possible is it that I saw myself in $20 profit? I made $20 this in the morning, and now I've blown off the $20 plus the little amount I had before. What is this all about? Why should it be so? That was the day I sat down. I took up my calculator and I began to calculate how much is $5 in my currency. When I checked it, I said to myself, okay, so this is $5 in my currency. Let me just bring a calculator so that we can just go do this thing straight and direct. If you can see my calculator, please use the chat box and say yes. Just want to make sure this thing is recording my whole screen. If you can see my calculator, use the chat box. No, I'm not. Yes, okay. All right, that's great. So now I when I sat down, I asked myself, how much is $5 in my currency? Now let's say for instance, in your currency, let's say $5 is let's say a dollar is 400 in your currency. Okay. And then you make $5 times five. And that's how much? That's 2,000 a day. Okay. Now, if you calculate yourself, your calculation, if you make your calculation and see yourself making 2,000 a day, and then you put it times, all right, times, let's say you want to trade for at least 20 days in a month, 20 days in a month. This is 40,000. In Nigeria, an average worker makes 40,000. Some make below it. I see some people who make 15,000 a month after working morning to night for their bosses. You understand? People work their head off every single day only to end up with 15,000 a month, some 20,000, some 30,000, and you are here making $5 a day and you're not appreciating it. This was the things I asked myself that day when I made that loss. I sat down and I calculated. I said to myself, so if I could make $20 in the morning, why shouldn't I be satisfied with it and leave that market for that day? You understand? Don't be a kind of trader who wants to trade out all the market all the day. Trader, if you can make $5 in a day, appreciate it. Come into the market the next day. Don't be overjoyous because of the little you've made and you want to make more, because that's where you see yourself blow it. And then that's where it begins to deal with your emotions. Oh shit, I lost $20. Oh no, I blew off everything I made. Oh no, it begins to deal with your emotions. You just feel like I don't want to trade again. But that's not what it is. It's not what it is, traders. So learn to appreciate the little profit that you make. If you can learn to appreciate $5, you will see yourself increasing gradually to $10. If you can learn to appreciate $10, you see yourself even $2 a day is something. Even $1 a day is something. Is That's what some people say half bread is better than none. So learn to appreciate the little you make. Do not be a kind of trader who wants to trade all the day. Do not do that. If you must be a good trader, you must learn to appreciate the little, because it's from little you gradually begin to grow higher. Now, the next on my list here is don't trade every day. Now I just talked about don't trade all the day. Now it's don't trade every day. A lot of traders want to trade Monday, Tuesday, Wednesday, Thursday, Friday. Oh, volatility works on Saturday. Let's trade. Oh, even Sunday, boom and crash. Let's trade. No, that is not what it is, traders. You must learn to give some space. You understand? You must learn to give some space. Give yourself the air. breathe, breathe in, breathe out. You trade on Monday, you make profit. You trade on Tuesday, you make profit. Why not use Wednesday to relax yourself? Appreciate your God for the little you made on Monday and Tuesday, and let Him give you the grace and the strength to move back in on Thursday. Why do you want to be a trader? You want to be a trader because you want to be independent. Is that not so? So if you are running out of working from 6 to 9 daily job, if you're running out of it and running into trading, and at the end of the day in trading you are still trading morning to night, Monday to Sunday, what's the difference between you and someone who works 9 to 5 daily job? So there have to be different between you and others. And what's the difference? The difference is that I can work whenever I want. I can rest whenever I want. Don't overstress yourself wanting to trade every single day. Take some time out. Relax yourself. Take some those times you take out relaxing yourself, you use it to begin to learn other things. Read some ebooks. You understand? Learn some other things. Because the more you learn, the more you keep winning, the more you keep growing. Don't just want to keep trading, keep trading. Yes, I know consistency is important, but being consistent does not mean trade every single day, trade all day long. That's not consistency, that's foolishness because you end up seeing yourself trying to be consistent and you consistently blow your accounts. That is what you need to understand. My boom and crash community, my traders know me very well. I don't trade all the time. Not all the time they see me come into the community dropping analysis. No, because I don't trade all the day. Sometimes I trade just twice in a week, as long as I've analyzed my market, which is falling back to the things I told you guys earlier, patience. If I analyze my market and then I see uh, a good setup and I take my trade and it gives me enough profit that I can use to run myself throughout the week, I'm satisfied with it. Even if I make it in a day, is enough for me throughout the week. Why should I continue to stress myself taking trade every day because I want to be profitable? That's not what makes you rich. You have to be different from 9 to 5 job. So learn to trade not every day, but at least once in a while. You can ask yourself, you can make a list for yourself, a trading list. Monday, Tuesday, Wednesday, I'm taking trades. Thursday, I'm taking off. Friday, maybe I'm taking off. Saturday, I want to deal with volatilities. Sunday, I want to deal with boom and crash. You understand? If you're a forex trader, by Sunday, if even by Sunday, if you're a forex trader by Sunday, you shouldn't even be taking trades. Rather, you should be analyzing your market for the week for to take your forex entries as a forex trader. You know very well that the forex market works Monday to Friday. So by Sunday, you should be busy analyzing what you want to do throughout the week. You can analyze the GBP USD, Euro USD, analyze different markets, keep them set, then your patience now comes in place. When Monday has arrived, you're looking at all your analysis gradually. You're observing your analysis gradually. Maybe your analysis, none of them fell out well for you on Monday. You say to yourself, no problem. I'm waiting for something. On Tuesday, you observe. The price might not have gotten to your anticipation. You relax. On Wednesday, it might begin to come close. You'll be like, okay, it's gradually getting close. Before you know it, the price goes according to your expectation. You place your trade because you have set up a very good high probability trade. Price goes for you. Boom. You place your buy or your sell confidently. You make your profit, a profit to cover 2 days for you. 2 days you take a rest. You're still waiting for others to analyze, materialize. That's what makes you a trader. But you know what some people do? People would say, "Oh shit, Monday, this thing has not gotten uh, according to my expectation. Tuesday, man, I can't wait. I can't wait. Let me just buy anything. Let me just sell." and then they blow up the little they've made. No, be patient. So so go and make that trading rule for yourself, right? Create it for yourself. Say to yourself, Monday, Tuesday, I want to take trades. Wednesday, I want to rest. Just put it in any way you have to put it perfectly. If you're a forex trader, use your Sundays to analyze your market. Don't trade on Sunday. Use it to analyze your market against the week. Always make your weekly setup. If you want to do a weekly setup, you want to start analyzing from maybe your weekly time frame or from your monthly time frame, so that you can have a very good high probability trade setup. And if you're not a forex trader, maybe you're a volatility trader, still, because even despite the fact that the price is moving Monday to Sunday, still make sure you learn to analyze your market and wait for your setups. Now, next on my list, I have trade few pairs and get familiar with it. A lot of traders always want to trade all the pair. They want to trade everything. No, that's not what it is. If you want to be a good trader, learn to have certain pairs that you are good with, familiar with. You can decide to say, okay, I want to master how to trade boom 500 and crash 1000. Or I want to master boom 500, the boom and crash markets, that boom 1500 and crash 1500, then a few volatilities, that's enough for me. Or if you're a forex trader, you want to be good at trading your GBP USD, Euro USD, you bring them down. At least 5 to 6 or latest 8 to 10 is enough. Don't be a trader who wants to trade all the market. You want to trade from volatility 10 to volatility 100 1S. You also want to trade range break. You even want to enter jump indices. Come on, you'll blow your accounts. That's all you need to know. Because it's when you have mastered one, you'll be able to use the tactics you use in killing that one to kill others. So you must learn to be a trader who knows how to trade at least a few pairs well. Don't always want to trade everything. Another on my list here is don't okay don't trade when not emotionally stable. Don't trade when not emotionally stable. Because number one, forex deals with our emotions. And then number two, you want to trade. You're not, and you know very well that you're not emotionally stable, and you want to take trade. You want to kill yourself. Do not take trades when you are not emotionally stable. Emotionally stable, I mean like when you're stressed out because of one thing or the other, family issue or this or that. Don't get into the chat, because the chat will deal with your emotions much more. It will deal with your emotions much more, especially if you mistakenly make loss. You not being stable, emotionally stable alone can make you get losses. Then how much more when you get losses? What do you think will happen? So you must learn to trade when your mind is fully stable. I have a lot of traders who come to me, they say, hey Tim, uh I don't know, I need to trade and I make money. I have this bill to pay, I have that bill to pay, a lot of things are on my head, isn't that? And I tell, oh, and you want to take a trade. You're not emotionally stable, you want to take a trade. No, you need to understand that number one, the forex market is the master of emotions. It deals with the human emotions. So therefore, you must learn to be emotionally stable before you enter the chat, so that it does not destroy your emotions completely. I hope we are learning. If you're learning, use the chat box and let me know if you're learning from this meeting tonight. Now, another thing on my list here is don't trade when you don't have when you don't have at least three confluences. If you do not have at least 3 to 4 confluences, trader, do not trade. A lot of traders will just get into the charts and draw a few trend line. When they draw a few trend line, they say, okay, yeah, let's trade. No, you must learn to have confluences. I always tell my students this: your confluence is your confidence. Because a lot of traders, that's one thing. Some traders know how to analyze the market. Some of them really know how to analyze it. But the fear to take the trade is what they really need to deal with. And I tell them, it's a very simple thing. To deal with your fear is your confluence. Your confluence is your confidence, trader. If you can learn to have at least 3 to 4 confluences, you should be confident to take your trade. Because what does your confluence do for you? Your confluence is like is what tells you, hey, number one, this is number one reason why you should sell. See number two reason why you should sell over there. Hey, look here, number three reason why you should sell. Now you have 3 reasons to sell. Why not be confident and take the sell? You understand? That is what we that's what we mean when we talk about your confluence being your confidence. The trade that I took today, I saw reasons why I needed to take that trade. Because my number one confluence already was I have seen market break out of structure. You understand? That was my number one confluence. Why I took that trade. Then I looked forward for other confluences like my candlesticks, chart patterns, my Fibonacci, so many more. Even before I gave you guys that signal in the group today, I showed you. I told you guys, hey, look, I'm looking forward to taking sell. I gave you guys a photo of my Fibonacci level. That's to enable you guys know that look, I didn't just take this trade out of because I want to take a trade, but I took the trade because I had reasons to take that trade. You understand? So if you want to be a good trader, you must make sure you have at least 3 or more confluences to take your trade. That's what makes you confident. We're gonna join back in the next 1 minute. Once we are cut off, everybody use the same link and join back, okay? Because the Zoom is gonna cut us off right now. So get ready. Now the next thing on the list before we get cut off is don't don't borrow to trade. When we come back, we'll talk about this. It happens to a lot of traders. We need to deal with it. In fact, let me cut it off myself. Everybody, we join with the link.